Welcome back, and joining me for a closer look at what's played out on the market scene today is Shaun Dendere from Trive Investments. Thank you so much for your time, Shaun. Quite interesting to see that the markets are quite positive. The equity market up by 0.75% today, and the rand remaining stable against the US dollar. No shock moves there. I don't know, is this signaling maybe sensible expectations for the budget?
Firstly, thank you for having me. To be honest, I think there are a lot of different factors that are affecting our markets. We look at what's happening in Europe, the Russia-Ukraine war, and the U.S. market obviously reopening post-President's Day yesterday. So I think it's just a knock-on effect. I think the true reflection of the market will actually come tomorrow after the budget speech. I think everyone is just almost like on hold until we get further news. But also we had some good news on the unemployment front. We saw that this is the second quarter that unemployment has decreased, which obviously has a positive effect on, how our market is performing. But once again, the budget speech tomorrow will tell us what economic reforms we're going to see for us to maintain this decrease in unemployment and the upward mood in the market.
And we will indeed be fleshing out those details tomorrow. Talking about reforms, you know that there's been a lot of focus on the logistics sector, where Transnet continues to be a challenge for a lot of companies, including Kumba Iron Ore, where they've had to reconfigure their production output. So they released results today, double-digit drop in revenue, that filtering through to the bottom line, which declined by 45%. But surprisingly, that share price surging over 7%, almost 8% today. Did the markets look past the softening of the numbers?
So I think that the markets are looking at the news. I think Kumba is looking at some form of private-public partnership in order to resolve, this rail rail situation, which has really affected their bottom line. So if they come to some form of an agreement or some form of structure where there's a public-private partnership, there would be potential, for that company to turn around. And looking also at China, which is a big consumer of iron ore, they're also starting to open up a little bit. The economy is starting to slowly start ticking positively. So I think that's what the market is basically digesting, as opposed to what's actually really happening internally there.
And on the China front, we also got some comments coming out of the president there, Xi Jinping, saying that signaling his support for the private sector. So hopefully we can start to see that opening up, filtering through to the numbers that the companies are churning out. Let's go to, it was actually all commodity counters that were out with the numbers today. BHP detailing their interim results, revenue dipping by 8%. We also did have a profit drop there as well. Also, dividend softening by 31%. What characterized this performance?
All right. We're going back to China on this one, right? I think that, first of all, the iron ore prices have been really terrible, for the lack of a better term. And China's, imports, what's the word I'm looking for? Capability has been a lot lower in the past couple of years. So that is really affecting, a lot of commodities actually, and commodity producers. And that's why we see BHP's numbers are not as positive as they would like them to be. I mean, there is a mirror effect with, one of our local miners, Kumba, when we look at what's actually happening with the iron ore industry, or that commodity specifically.
Well, China is involved in some way or another, because we also know that they're also at the center of a lot of geopolitical tensions. Of course, when there are geopolitical tensions, investors look to gold as a safe haven. So let's go into DRD Gold, which released interim results today. We did see that top line climbing 28%, also filtering through to bottom line growth of 65%. I'm also only actually surprised by the share price movement of this, because it's not up as much as I thought it would be. Not much cheer in that. Your view on the shine of DRD Gold?
I mean, the numbers are absolutely brilliant in my opinion. But we've seen gold doing really well, the actual commodity itself.
Yes.
We spoke about, geopolitical conflicts. we speak about the environment that we were operating in last year, high volatility, high interest rates, election year as well last year. So gold has really had quite a nice ride. And so for a lot of the gold producers, their numbers are actually backed by, the price of gold. And if we're looking at DRD, I think they also finished a project. There was a project that they were working on, which they completed. I'm forgetting the actual specific project, but that also lowered their cost on their book, which has a knock-on effect on the bottom line, as we can see.
All right. Well, let us get to your stock pick for today, Shaun. What are you choosing?
All right, sticking to that commodity theme. So I'm not choosing a company per se, but rather an ETF. I would be going with any gold ETF at this stage, just to ride out that gold price. And then certainly is still going to be there. Donald Trump is still the president of the United States, so we need to to ensure that we protect ourselves.
Someone said take Donald Trump seriously, but not literally. So quite a perfect summing up of just how we should approach Donald Trump there. But thank you so much for your time, Shaun. That was Shaun Dendere from Trive Investments.